Listen to me very carefully. I am 72 years old. I have been investing since before most of you were born. I have seen the Bretton Woods collapse. I have watched the petrodollar system get built. I have lived through the gold rush of the 80s, the dot-com bubble, the housing crash, and every financial crisis in between. And I am telling you right now, with absolute certainty, that what is happening with gold and silver is not normal. It is not a bubble. It is not speculation. It is a warning. And if you do not understand what is happening, you are going to watch your wealth evaporate over the next 5 years, while the people who prepared get richer than you can possibly imagine. Gold and silver are both at all-time highs. Your gut is telling you that you have missed the boat. But here is the problem with your gut. It is wrong. Central banks are buying gold at levels we have not seen since 1967. That was the year right before the entire global monetary system collapsed. The biggest metal exchange in the world, COMEX, is fighting the rise in prices. They just raised margin requirements again to try to crush retail investors. Basel III banking rules have reclassified gold from risky speculation to cash equivalent, and 11 nations representing half the world's population are launching a gold-backed currency to challenge the dollar. So the real question is not whether you are too late. The question is whether you understand what is actually happening here, because this is not just about precious metals. This is about the biggest monetary shift since Nixon took us off the gold standard in 1971. I was there. I remember it. And I am watching it happen again right now. Now, before I tell you exactly what the central banks know that you do not, I need you to do something for me. If you are serious about protecting your wealth, if you want to understand what the smartest institutions in the world are doing while everyone else is distracted by stock market headlines, you need to subscribe to this channel right now. Hit that button, join this community, because what I am about to share with you is not theory. This is not speculation. This is intelligence from someone who has been in the markets for over 50 years. So subscribe and let us navigate this together. Do it now. I am Charles Wellington. And unlike the young people on television who have never lived through a real monetary crisis, I have seen what happens when the system breaks. I know what it looks like when central banks panic, and I am seeing those exact same patterns right now. Let me hit you with the facts. No sugarcoating. Gold's performance last year was extraordinary. All-time highs, 65% increase in 1 year. That is the kind of move you see maybe once every 50 years. Silver hit all-time highs with a 163% gain. It outpaced gold. But here is what you need to understand. You and I are not driving this. Retail investors buying a few coins are not moving these markets. I do not care what the gold bugs tell you. They are wrong. Who is moving it? Central banks. They are driving this. And they do not buy gold for fun. They do not buy to speculate. They buy because something is coming, something big. Central banks are buying about 1,000 tons of gold per year, the highest level in modern history. Let me repeat that. 1,000 tons per year. Do you know the last time we saw this kind of aggressive gold buying from central banks? 1967, right before the Bretton Woods system collapsed. I was a young man starting my career in finance, and I watched the entire global monetary system fall apart in the span of a few years. Who is buying? The National Bank of Poland bought 95 tons last year. Brazil increased their gold allocation target to 30% of reserves. 30%. They bought gold for 3 consecutive months in a row. Other major buyers include Uzbekistan, Kazakhstan, Indonesia, Turkey, Czech Republic, Kyrgyzstan, and China. China is buying massive amounts and they are not telling us the real numbers. Why does this matter? Because the last time you saw this pattern, the entire global monetary system changed within a few years. These central banks are not buying gold because it is shiny. I have been around long enough to know that central bankers do not make emotional decisions. They are buying gold because they are preparing for a world where the US dollar is not the dominant reserve currency anymore. Now, central bankers will always tell you the dollar is strong, the system is stable, everything is fine. I have heard this speech 1,000 times over 50 years. But their actions tell a completely different story, and I learned a long time ago to watch what people do, not what they say. The dollar's share of global reserves in 2008 was 65%. In 2024, it was 58%. That is a 7 percentage point drop. And maybe that does not sound like much to you, but I have been doing this long enough to know that when we are talking about central bank reserves, a 7 percentage point drop represents trillions with a T of dollars being dumped. Countries are actively diversifying away from US dollar holdings. This is not theory, this is measurable fact, and it gets worse. Countries are bringing their gold home. Germany repatriated hundreds of tons from New York. Turkey moved gold from overseas back home. Poland moved 100 tons home. And here is the kicker. Sweden tried to get their gold back from the UK and they were refused. Refused. Does that sound like confidence in the system to you? Think about it from a central bank's perspective. If you are any country in the world, you normally hold your reserves in US dollars, but you do not hold physical cash. That would be ridiculous. You buy US government bonds because at least you get some interest, maybe 4% or something. But those bonds are digital. Who controls them? The US government. Because they issued them. So they can take them away from you anytime they want. It is the same with gold stored in New York or London. If the US government decides they do not like you, they can freeze your assets. They can confiscate your gold. So these countries are doing what any rational person would do. They are bringing their assets home. They want control, and they are buying gold that cannot be printed, cannot be confiscated, and has been a store of value for 5,000 years. But it gets even more serious. Trade agreements are being signed that completely bypass the dollar. For decades, international trade happened in dollars. You want to buy oil? Pay in dollars. You want to buy natural gas? Dollars. Mining products? Dollars. Everyone needed dollars. That created constant demand for the US currency. And that demand is what allowed the United States to print unlimited money without consequences. But things are changing. China and Russia are trading oil in local currencies, not US dollars. India and Russia are doing the same thing. China and Saudi Arabia are discussing renminbi-based oil trading. Every single one of these deals reduces dollar demand, and it chips away at the petrodollar system that has supported the U.S. economy since the 1970s. On top of that, the BRICS countries are developing an alternative to the SWIFT system. Now, if you are in the U.S., you probably do not use SWIFT much because you transfer money domestically. But any international transfer anywhere in the world goes through SWIFT. And who owns and operates SWIFT? The United States. If the Americans do not like you, they can exclude you from the system, and that means you cannot trade with anyone. That is the ultimate sanction. But the BRICS countries are building BRICS Pay, a backup system. It is already operational. Billions in transactions are flowing through it, so central banks are buying gold, reducing dollar reserves, moving their gold home, and building alternative payment systems. The evidence is overwhelming. In October 2025, BRICS nations launched a pilot for a gold-backed settlement currency. They call it the unit. This is not some conspiracy theory. This is real. This is happening right now. What is it? It is a digital trade currency designed for cross-border transactions between BRICS countries. It is not replacing national currencies. It is not something consumers will use to buy things online. The goal is simple: reduce reliance on the US dollar for international trade. How is it structured? 40% is backed by physical gold. 60% is a basket of BRICS currencies: Brazilian real, Chinese renminbi, Indian rupee, Russian ruble, South African rand. Each currency gets 12% weighting. All deposits and daily pricing run on a blockchain. The value is recalibrated daily based on the market price of gold and the exchange rates. Now, why does this matter? Because it allows these countries to settle transactions without using US dollars. They can store value using gold instead of foreign dollar reserves, and it reduces their exposure to dollar debasement and having their savings confiscated. Is this going to replace the dollar tomorrow? Of course not. It is a prototype. There are significant challenges, but this is the preparation phase. We are not in the crisis yet. We are in the stage where the world's most powerful nations are building the infrastructure for a post-dollar world, and they are backing it with gold. I have been through enough financial crises to know that you do not wait until the crisis hits to prepare. You prepare now while everyone else thinks everything is fine. Now, let me explain something that is absolutely critical. And I know this sounds boring. I know your eyes are going to glaze over when I say Basel III. But I need you to understand this because it explains why gold is rising and why I am extremely bullish on gold for the next 5 years. Basel III is a set of international banking regulations created after the 2008 financial crisis. They are named after a Swiss town called Basel. The goal was to make banks safer and more stable. The rules tell banks how much capital they have to hold and how they classify risk. Now, before Basel III, gold was classified as a risky speculative asset of the lowest quality. Can you believe that? Gold, which has been money for 5,000 years, was treated like some crazy Ponzi scheme investment. After Basel III, gold is now a Tier 1 asset, the highest quality, equivalent to cash. Let me be very clear about what this means. The global banking system reclassified gold from risky speculation to the safest asset there is. That is the most significant regulatory change in financial history, and almost nobody is talking about it. Why does this matter? Because banks holding gold are now incentivized by regulation. Gold has no counterparty risk. If a government stops paying on bonds, you have risk. If you own physical gold, there is literally no risk except someone stealing it. It is just you and your gold. So banks globally are buying gold not just for speculation, but to strengthen their balance sheets under these regulatory requirements. European banks are increasing their gold holdings. Asian banks have significantly expanded their gold reserves. Let me give you the numbers. Total demand from Basel III compliance is about 2,000 tons. This is real structural demand. It does not care about price. It is not speculative. It is required by law. And the regulation says no paper gold, no futures, no certificates, no ETFs, physical gold only in your own vault. Now, annual gold production is about 3,000 tons. Industrial demand in jewelry takes about 2,000 tons. That leaves about 1,000 tons available for everyone else. But Basel III demand is 500 tons per year. Central banks are buying about 1,000 tons per year. So we have 1,500 tons of demand and only 1,000 tons of supply. We have an actual shortage of gold. And this is where it gets really interesting. Europe implemented Basel III. Asia implemented Basel III, but the United States delayed it until 2028. Why? The official reason is that U.S. regulators said they needed more time for banks to prepare. But I have been around long enough to know when someone is lying to me. The real reason is that implementing Basel III immediately would have created a massive instant crisis in the paper gold market. Let me tell you about COMEX, the Chicago Mercantile Exchange. It is the world's largest paper gold and silver market. Hundreds of billions in futures and options trade there. Most U.S. banks have significant exposure to this paper gold. It is unallocated. There is no real gold attached to it. It is leveraged to the absolute limit. If Basel III was implemented immediately, U.S. banks would need to convert their paper gold to physical gold. But COMEX does not have anywhere near enough physical gold to satisfy all the paper claims. How much do they have? Somewhere between 100 to 200 ounces of paper gold for every 1 ounce of physical gold in existence. Think about that. 100 to 200 times more paper claims than actual gold. This is fraud. Pure and simple. I have seen this game played before in my 50 years, and it always ends the same way, badly. So why did the U.S. delay Basel III? To allow the system to slowly unwind these fake paper gold positions, to quietly accumulate physical gold, and to avoid a sudden crisis that would expose the fraud to everyone. But here is the problem. The rest of the world has not been waiting. European and Asian banks have been buying physical gold for years. U.S. banks are sitting on paper. So when 2028 arrives and all these US banks suddenly need physical gold, where are they going to get it from? Maybe from Asia, maybe from Europe. But those banks are not stupid. They know what is coming. When the US finally implements Basel III, we are going to have the demand shock of a lifetime, and gold prices are going to go absolutely vertical. Now, let me talk about silver because silver is different. Silver should be following gold higher. The fundamentals are there. We have a massive physical deficit. Industrial demand is exploding. Solar panels, electric vehicles, AI chips, they all need silver. If we get solid state batteries for EVs, each vehicle will require a kilogram or more of silver. The EV industry alone is about 3% of global demand. That is going to explode. The solar industry is about 16% of demand and growing rapidly. Mine production has been decreasing. China has put export restrictions on silver. And Elon Musk, who knows more about industrial processes than almost anyone, has warned about potential silver shortages. Physical buyers in Asia are paying $35 more per ounce than the paper price in the US. London silver vaults are basically empty. Volumes have fallen by about a third over the last year. The physical market is screaming there is real demand. So, why is the price being suppressed? Because silver is the people's metal. Gold is held by institutions and the wealthy and central banks. When gold prices rise, it strengthens their balance sheets. But silver is held by regular people. And when silver explodes, people notice. When silver goes vertical, it becomes a warning system that something is wrong with the currency. And the powers that be cannot allow that to happen. Not yet. So, what are they doing? COMEX just increased margin requirements for gold and silver. Again, every time they do this, silver crashes. Why? Because leveraged retail traders and smaller institutions get forced to liquidate. It is the same playbook they used in the 1980s and in 2011. The purpose is to allow the bigger players who are short silver to unwind their positions with smaller losses. But this can only last so long because the physical metal demand is real and it is strong. And when we get to the point where COMEX cannot deliver on its paper contracts, the paper price will become irrelevant. COMEX has about 2 weeks of global supply of physical silver. 2 weeks. When that runs out, and it will run out, the paper price becomes meaningless. And that is the moment when silver is going to explode higher. I have seen this movie before, and I know how it ends. Now let me connect all the dots for you. We are living through the early stages of the next global currency reset. The triggers are very clear. The petrodollar system is ending. Saudi Arabia is accepting currencies other than US dollars. Russia is selling oil in rubles and renminbi. The dollar oil link is breaking. We are in the preparation phase right now. Over the next few years, we are going to see the BRICS currency expand. China's silver restrictions will get stricter, and US Basel III implementation will create a massive demand shock leading up to 2028. The big banks are not stupid. They make billions of dollars. They are going to start buying physical gold going into that deadline, and alternative currencies are going to come to life. We are going to end up in a world with multiple reserve currencies, no single dominant currency. The dollar is not going to disappear, but its dominance will end. What does this mean for you? The dollars in your bank account will buy less and less every year, and the US government is doing everything it can to make sure you do not notice. They are lowering oil prices. That is what Venezuela was about. They are lowering credit card interest rates. Trump just announced that. They are taking over the Fed to lower interest rates. Your mortgages and car payments will get cheaper. And what is the purpose? So you do not feel the inflation because your gas bills have gone down. But what they are hiding from you is the massive money printing that is driving asset prices through the roof. Look at the stock market last year. It did 17%. That is inflation. Somebody got 17% wealthier. The year before was 25%. The year before that was 25%. Add that together, and you have almost 100% inflation over 3 years. People who own assets doubled their wealth in 3 years. And the things those people buy have gone up significantly in price. But ordinary items, they are trying to suppress those prices so regular people do not find out. And by the time they find out, it will be too late. Inflation is guaranteed. It is much, much higher than the government will acknowledge. And your retirement is at risk if your wealth is tied to dollars. Now, should you put everything into gold and silver? No, I am not saying that, but you need to be in high quality assets, real estate with good returns, quality stocks with pricing power and strong margins, and yes, gold and silver as insurance against what is coming. For metals, I personally hold more gold than silver. I think silver might have a stronger run because of the paper price manipulation. But that is more of a trading opportunity than a long term hold. It is also more expensive to store because it takes up so much space. Gold has the Basel III regulatory tailwind. That is what I like about it. But silver could outperform in the short term. What percentage should you allocate? That is a personal decision. It depends on how many income streams you have, how long until retirement, what your current allocation looks like, what your overall plan is. But I do think gold and silver have a place in almost every portfolio. Do I think paper gold and silver are a good idea? Not particularly. ETFs, in theory, hold physical gold as backup. But do they really? Or do they just hold futures contracts? That is what I would investigate before putting money there. Look, I am 72 years old. I have lived through enough crises to know what works and what does not. I have seen fortunes made and fortunes lost. And I am telling you right now, based on 50 years of experience, that what is happening with gold and central banks is a massive red flag. The central banks know what is coming. They are preparing. Are you? Here is what you need to understand. Central banks are buying gold at levels we have not seen since 1967, the year before Bretton Woods collapsed. The petrodollar system is breaking down. BRICS nations are launching gold-backed currencies. Basel III is creating structural demand for physical gold. And COMEX is sitting on a mountain of paper claims with almost no physical metal to back them up. This is not speculation. This is not theory. This is happening right now. And the people who understand what is happening are going to protect their wealth. The people who ignore it are going to watch their savings get destroyed by inflation and currency debasement. So you have a choice. You can pretend everything is fine. You can keep all your money in dollars and hope the government will take care of you. Or you can open your eyes. You can see what the smartest institutions in the world are doing, and you can position yourself accordingly. I have been investing for over 50 years. I have made millions. I have lost millions. And I have learned that the only way to survive and thrive through monetary crises is to prepare before everyone else figures out what is happening. And right now, most people have no idea. Now, if you found value in what I just shared, I need you to do something for me. Hit that subscribe button, join this community, leave a comment below, and tell me how you are positioning yourself. Are you buying gold? Are you accumulating silver? Are you diversified across multiple asset classes? I want to hear from you, and share this video with everyone you know who cares about their financial future, because this information could save them from making catastrophic mistakes with their money. We are building a community of serious investors here, people who understand that wealth is protected through knowledge and preparation. I am Charles Wellington. I am 72 years old, and I have seen this movie before. Pay attention to what the central banks are doing, not what they are saying, because their actions are screaming that something big is coming. Your future depends on understanding this. Do not wait until it is too late. Thank you for watching, and may you protect your wealth before the reset happens.